stuff. And today we are talking about investments, especially the Zimbabwe Stock Exchange, where I'm joined by a retail investor, Alfonce Maketo. Alfonso, welcome to the Money and Markets podcast.
Thank you so much, Mr. Sharara. Good day, Zimbabwe, and thank you so much for having me on the program.
Thank you for taking your time to be with us. Now, let's kickstart the conversation, Alfonse. 2023 presented unique economic challenges. We had high levels of inflation. We had also currency depreciation as well. I think we started with the Zimbabwe dollar. It depreciated until we introduced the ZiG. There was some kind of stability for some time, and then we saw the massive devaluation by the Reserve Bank of Zimbabwe by about 43% of the currency. How did that influence your investment strategy in 2024?
Yeah, thank you so much. When we entered into 2024, the goal was to find investments that preserved the value and also gave an opportunity for growth. However, the economic challenges that persisted in the year were quite gigantic. The economic challenges that persisted during the year were quite gigantic, so that we had to change our goals. For example, if you looked at the current instability, it goes hand in hand with inflation, and inflation can eat into your investments. Then we, as a country again, we also have a huge debt overhang. Some reports estimate our external debt to be over $12 billion. So you can see what effect that figure can have on even our listed companies which we invest in. They may not be able to access cheaper lines of credit from international funders. Then we also have energy shortages, which obviously increasingly and ultimately they ate into my dividends and your dividends as well, because the cost of production was high. So basically, I think 2024 needed a robust investment strategy, which at the very least had to guarantee capital preservation before we looked at appreciation. So basically,
so would you say about this? Yeah. So would you say your goals in 2024 were they more of income generation, or you're mostly looking at capital preservation?
Yeah. Our primary goal was growth. We wanted to grow our portfolio, but you realize starting in May, after the introduction of the new currency, we had to re-strategize. We had to look at income generation, short-term income generation investments through capital appreciation. So we targeted counters which offered those opportunities. For instance, if you can go back to between January and February, OK moved from around 2 US cents to 5 US cents within 3 weeks. That's more than 150% gain in less than a month. So we were targeting those short-term gains to hedge against the economic challenges that we had earlier highlighted on. Opportunities also came in NANPEC. We also had South Africa, EcoCash at one time presented such an opportunity. So basically, yeah, as I said, the primary goal was growth, but we had to shift in tandem with how the economy was performing. Otherwise, if we just wanted to stay on growth as our goal, we would be crying, to be honest.
Yeah, true to that. So let us see, looking at the listings of the Zimbabwe Stock Exchange, you've got your rates, your ETFs, as well as stocks. Which ones were you more aligned to in terms of your investments?
ETFs, no. Rates, no. Derivatives, no. Unit trusts, no. Yeah, maybe we are going to look at rates.
Basically on the ordinary shares themselves.
Yes, 90% we are there.
All right. And in terms of your stock selection, were there any specific industries within the ZSE that you were particularly interested in, and what drove those decisions? What factors drove those decisions?
Basically, okay, let me just put figures there. I'm talking of we, because we just invest as a company, not as a single person.
All right,
myself.
As an institution. All right, that's good.
As an institution, yes. We have 6 counters that we look at. You've got your Delta, your Econet, your EcoCash, your CBZ, your West Property, your INSCO. Yeah. But now we have to change. So you can see it's a variety of what?
I can see there you are into banking, you are into manufacturing, you are into insurance, the whole lot. And given that you are not into ETFs and rates, will it also mean that if the market was to introduce things like forex trading, things like cryptocurrencies, trading of gold, were you likely to go into those?
No.
Yeah, maybe you can tell us why you're not interested in these other instruments.
Yeah, when you're a marathon runner, you specialize in marathon. You won't want to go into those short distance, 100 meters, 200 meters, otherwise you will regret. So we want to stay in our lane. We do and invest in what we know best. Unless maybe, of course, if we've got some regulatory changes that will be effected, so that we actually know what exactly forex trading is about. Probably, we might jump in, but at the moment, for us, forex and crypto are still no-go areas.
Talking about those, like in terms of regulatory changes, policy changes, in 2024, would you say there were any that also affected your investments?
Yeah. Probably the biggest one was the new currency. Because when it came with a lot of conversions, a lot of confusion. Yeah. And just like I've highlighted earlier on, we had to change our investment strategy from being growth oriented to capital appreciation, whereby we would take those minor gains from our stocks that would have appreciated and pack them in our kettle.
And in terms of your experience in trading in 2024 on the Zimbabwe Stock Exchange, what key lessons can you share with fellow retail investors?
Yeah, I've got quite a few that I always tell people. One, you will fail and you will lose money in some cases. However, that is not a password for you to move out of the stock market. You shouldn't get scared because of that. It's part of the learning process. Everyone loses money. Even Warren Buffett, he said it once, he also lost some money. Number two, it's never too late to change course, to pivot, or to re-strategize. When you see that this strategy that I was on is not working for me, no one is binding you to stick to that strategy. You just have to change your course. Then number three, it's important as well to diversify onto the other stock markets in the region, and internationally as well. Yeah, because Zimbabwe is just a small piece in the investment arena. But if you know that I've got some investments in Zimbabwe, in Zambia, in South Africa, in the USA, because of technology, it's not even possible. So why can't you do that? Number four, always read. I always tell people, a reader is always ahead of everyone else. So we need to be to have information as much as possible, because the world is dynamic, things are moving, information is moving fast. If you don't read, you stay behind. So I always want people to be to be reading as always. Then number five, which is I think is the last one, the government is not your friend. The government is not your friend. just be wise. I think I'll leave this one here.
All right. We thought you were going to tell us why you say so. But anyway, so looking into 2025, Alfonso, what's your outlook like on the stock market?
Yeah, we are now 3, 4, 5. I think we are now 3 days or 4 into the
of trading.
Basically appears bearish at the moment. Why? Was judging by the trade volumes. I think I last saw the price sheets a few hours ago. You can see the trade volumes are still low, but what's happening? Prices tend to continue going down for quite some. It's been going down for quite some bit of time. And from what I can say and what I'm hearing on the streets, most people are taking a break from the stock market. Yeah. Again, figures from last year also told that there were less than 25,000 active retail investors on the stock exchange. Would you believe that? Why?
Yeah, I know the numbers. Yeah.
Why would people run away from the stock market?
So,
people are interested in the stock market and prices are going up.
Yes, exactly.
You see now.
So my take on that. Okay, go ahead.
Okay. I think when we have got this bearish environment, that's when people should start to get onto the stock market. Not when everyone is talking about, I made money, I'm selling this, I want to make money. Which counter is making? No. I think we need to get the message out there. When the outlook is bearish, that's where we should mean. Someone said, bears make money, bulls make money. It's only pigs that get slaughtered.
Yeah, I do agree with you there, Alfonso, because for most retail investors, for example, when retail investors, maybe their capital is not that much, and when they buy into shares, for example, they buy into Delta, you're basically maybe buying 1,000 shares or 10,000 shares if you put a bit of money in there. But when it pays the dividend, it won't be much to you. And then you hear people saying that it's not worth it, the dividend is not worth it. But here's the thing. For me, I believe that this last year, when the market was bearish, especially the second half of the year, as well as we have seen a similar trend again so far in the year, the 3 days that we have traded, for me, it's an opportunity to accumulate as many shares as you can. Then your dividends will start to make sense. If the market was running at the moment, your $100 doesn't buy you much. It doesn't buy you much in terms of your deltas of this world. But if the market remains sort of like bearish as it is, for long-term investors, for dividend, those who invest to get a dividend, it's actually a good time to be buying, for as long as the underlying companies that you're buying into are companies that are doing well, are companies that are showing growth, and also companies that have got the potential to pay a dividend in future. So you actually get an opportunity to be accumulating as many shares as you can. I last year, ever since I started investing, I think last year gave me an opportunity to buy as more shares than I have ever bought since I started investing. Why? Because the market was very low. Look at some of these counters at the moment. You look at your Econet of this world trading at less than 10 cents. That's an opportunity to accumulate as many shares as you can. At some point, we're buying this counter at more than 20 cents. So that's my view when I look at the market where it is at the moment. But like we always say, it depends with your investment objectives and goals. What is it that you want to achieve, and your time horizon as well. So it differs with each and every individual.
Yeah, that's very true. But having said that, I think we honestly need to have a mindset shift whereby people would want to flock onto the stock market when it's all green. I think you will remember between January and April last year, when prices were there was so much interest on the stock market. And I think over that 25,000 figure. People get depressed when prices are low. But like what I was saying, okay, Delta in November was around 20 ZiG per share. What is it trading at today? Under $14. Is that correct? I haven't checked it.
Under 14 ZiG.
Yes.
Yeah, I didn't get a chance to check the prices today. Yeah.
So people just say, no, I bought it at $20. Now I'm trading at 40. Let me just sell and cut my losses. Instead of, we know Delta is just a good company. Of course, I'm divesting from Delta, but we know that's a good company. Why should you not buy more, like what we were doing last year, so that you average your cost?
Yeah, that's dollar cost averaging. You also average your costs downwards. But like I said, maybe some of those who then decide to sell and cut their losses, it depends on their maybe time horizon. For example, if it's somebody who was targeting to say within a month, this is where I should be, and it's not happening like that, then maybe they might want to cut their losses on that particular counter. But anyway, so that's I don't know if you've got any words of advice to fellow retail investors before we call it a day.
Yeah, okay. A great investor once said, someone is sitting under a shade today because someone planted a tree a long time ago. The same applies, I think, to us when you're investing on the stock market or investing anywhere else. However, to all the investors and those sitting on the fence who are still undecided about what course of action to take, I just urge them to start investing. Just start small and start wherever you can. Start how you can. The idea is to start small. With time, you, your family, your relatives, or someone else will just enjoy those fruits. But the key is just to start and keep investing. I think that's all that I have to say for the moment.
Thank you so much, Alfonso, for taking your time to be with us on the Money and Markets podcast.
Thank you so much, Mr. Sharara, for having me, and thank you, everyone. Good night.
Thank you. So that was Mr. Alfonce Maketo, who is a retail investor on the Zimbabwe Stock Exchange and other markets, obviously in the region and internationally. He also invests as part of an institution. And you're watching the Money and Markets podcast. And today we are just talking about how it panned out in 2024 in terms of the investment environment. And also he was telling us his outlook, what he's expecting going into 2025. So this podcast is for educational purposes only, for information purposes only. It's not financial advisory. If you want financial advisory, go and speak to your stockbroker or an asset manager or a financial advisor. And if you're interested in trading on the Zimbabwe Stock Exchange in the investment, to start your investment journey, you can do that through going through a stockbroker, or you can go through an asset manager. But if you are one of those who want to do it yourself, there are platforms where you can also open an account on by yourself. That's on the there are 3 applications that are there: ZSC Direct, VFX Direct, and C-Trade. You can also open accounts on their websites. For example, www.zscdirect.co.zw. That's if you want to do it yourself. And remember, investments is for all body. It doesn't need those who have got huge amounts of money. You can start to invest for as little as $5 or even $10 to start your investment journey on the Zimbabwe Stock Exchange. Some people would say, no, with ZiG, it doesn't make sense. But if you believe that ZiG doesn't make sense, why don't you learn the ropes with that ZiG? So that's the Money and Money podcast. Until next time, bye-bye.